Three entry models that I'm going to show you in this video is going to change your trading. Now, I'm not telling you to use all three of them, but pick one, backtest it, and find whichever one works best for you. So let's get started. We know the simple entry model anyway. We know the simple ICT break of structure, the 2022 mentorship model. Simply, we're looking for a swing low to be broken, such as this, a retracement, and then a continuation. We want to get in around this area right over there. Okay, we have a swing high, we have a swing low, swing high, break of the swing low, and that is what the entry model is. So that is exactly what we have in this example right here. We have a swing high, a swing low, swing high, and then we break that swing low and we get our entry model. So the break of structure is right over there. Now the first entry model which you can implement is just a simple EQ entry, the 50% of the Fibonacci and 50% of this leg going down. So if we go from top to bottom and extend that out just like so, we can see that the EQ is getting hit right there, 50%. So we can put our entry right at the 50%, stops above the highs, targets a 1 to 2 or whatever you target. This is entry number one, the standard EQ entry. Now the second one is actually entering at a fair value gap. So in this leg coming down, you want to see an imbalance. You want to see a price inefficiency and you want to see it getting filled. This is where you can enter fair value gap entries. So in this leg going down, if I zoom in on it, you can actually see a fair value gap right there. So your entry you'll be shorting is at the first candle right there. Stops are going to be above candle 1, 2, 3. So above candle 1, just right there. This is like a 3 pip stop. Obviously don't put 3 pip, extend to maybe 5 minimum. And then basically same thing, target a 1 to 2 risk to reward. This is the second way of entering your trade. So the third trade is actually an order block entry. Now order blocks are a series of up close candles before a down move after a liquidity sweep, and that is in a bearish scenario. Liquidity sweep is right over there. Now this is a series of up close candles, so you can basically just take this whole area as your order block and enter right there, stops above there, targeting a 1 to 2. But if you actually want to be a bit more accurate, you can target the last candle right here, the last up close candle, or maybe the last couple. So in this case, this. Now what this is going to do is not always going to hit your entry point, but once it does, it will give you an extremely nice risk to reward ratio and an extremely precise entry. Now for me, I tried chasing these precise entries and sometimes it just got very annoying and frustrating because in this case, as you can see, it hit the EQ entry and the target would have been reached. It would have been a winning trade, a winning day. If I was waiting here, you're just literally just waiting for such a precise entry and then it goes in your favor. Sometimes it happens, sometimes it doesn't. I would say for you, keep this short and concise. Just take the EQ entry. Get your Fibonacci, measure top to bottom, enter at the EQ 50%. That's why I tell all my students in my mentorship as well. EQ entry, EQ entry, EQ entry. Keep it simple, keep it repeatable, systematic, and process driven. And that is how you become profitable. So that's all for today. That's all I wanted to cover. 3 different ways you can enter the market. Let me know in the comments which one you use, which one you find the best, and which one has been giving you success if it has, or maybe if you have any questions, let me know in the comments. I will see you in the next one. Happy trading and stay safe.